We're 3.5 hours into trading. It is Friday, September 17th. Thank God it's Friday. Hello, traders. I'm going to start off with a stock first. I am not going to show you my previous picks because we'll get to that in a minute. I've got these charts queued up. I want to show you something. Earlier today, we come in. Market, big gap down. Pretty heavy selling pressure. We've got long tails above body right in here. And you can see that this gap is getting some follow through traction right in here. In fact, we go down and test the low from the prior day. Very soft price action. Just be super, super cautious in an event like this. But if you feel that market support is starting to form here because we've got some tails under body, we know that we're on a bullish 1OP cross, which I wouldn't pay too much attention to this right out of the gate after heavy selling like that. You might be tempted to look for some stocks with relative strength. Let's say that you think that this might be a little bit overdone and we're going to get a little bit of a bounce in here and you want to find some stocks with relative strength. How do you trade it? What should you do? Well, you look through the searches and you come up with LCID. Here you've got a stock that's gapped higher through the prior day's high, big volume, excellent relative strength, and you can see same amount of time elapsed here. This is what the market's done. This is what the stock has done. You think that the market's going to bounce in here, which I don't think is a good assumption to make after long red bars closing on their low, but let's say that you did. And we were approaching the 50-day moving average and a longer term upward sloping trend line. So let's say that you were premature and you wanted to take a long position. Well, LCID would be the type of stock that you would want to take a position in. So let's forward one bar here. Oh, excellent. Here we go. It's moving our way. Everything looks great. But let's do the same with the S&P and see what happens here. Uh-oh. Uh-oh. We're on the wrong side of the market. Look at this market drop right here. We didn't expect that. We were expecting a nice bounce in the S&P 500. Didn't happen. In fact, the opposite happened. If I bought futures in here looking for that bounce, I just got my head handed to me. If I'm long the stock, I'm going to exit because this is not what I expected. And I make money on the trade because I'm in the right stock and I'm trading relative strength. Folks, that's what we do. That is the cushion that we trade. I did this trade. I did exactly this trade and I posted it in the chat room and I posted why I got out of the trade. If you're not paying attention to the market, you're going, Pete, why'd you get out of this trade? Everything looks so good. Look at these long candles stacked one on top of the other. Because the market just made a new low. So if we continue to fast forward, we'll take a look at what the market did from that point on. Okay, yeah, now it is starting to find some support, but now we've got another red bar here on the low, and I'm not expecting this type of weakness. So I've got to get out of the trade. And it will give you some time to do that. Stocks with incredible relative strength, stocks that are breaking out through technical resistance, stocks that have massive volume like this are going to give you that cushion to be wrong. But don't disregard what's happening in the market. You've got to pay attention. And so I took my profits, I got out of the trade. And yes, the stock held strong for a while, but eventually, even stocks with fantastic relative strength are going to cave. So in here, as this second red bar is forming, most people are going to get stopped out when they buy up in here and they're going to go, oh boy, another loser. You should have been paying attention to what the market was doing in here, taking your gains and looking for a better entry point. I had another example out of the gates this morning, ETSY. Really nice looking stock. I still like it. I still think ETSY does well. And we're going to go right back to that same time frame and we're going to take a look at what ETSY was doing. So there you've got the market pulling back, pulling back, pulling back. Let's line these two charts up so that you can see what's happening tick for tick. So what do I do with this information? Look at that big, long, powerful green candle, which by the way, ETSY. I like it. I love this horizontal breakout right here. You can see that big sell-off right there, bullish hammer. Now it's through that horizontal resistance point. Stock has relative strength on a D1 basis. I like it. I think ETSY looks good. I would trade it today if the market rebounds. I like it on the upside. So let's go back to that 5-minute chart and let's see what's happened so far during the course of the day and how you should have been approaching it. So after about a half an hour of trading, this would be my conclusion. Super nice here. Yes, we get a pullback, but the market has been really soft in here. We see it pulling back. Stock is able to preserve half of this long green candle. Okay, that's pretty nice. I am seeing a bunch of tails of a body here. That tells me that there's resistance. Every time the stock tries to go up, whappa, whappa, whappa. Sellers are trying to take profits. Why? Because the market's starting to pull back and the stock has made a nice run higher. So they are going to exit and look for a better entry point. What do I do with this information? I know that this is a nice resistance level that's been forming. I know that I like this stock, so I'm going to click alert. I'm going to double click on the high of that bar right there, because if that's breached, I want to know about it. What else can I do? I'm going to click alert. I'm going to click on that candle right there, and I'm going to click on that candle right there. Now, and you can see that the line didn't draw right now, but it did earlier today. Now I've got a downward sloping trend line that's going to follow that stock as it comes in. Eventually, when the stock finds support and starts to regain its footing, I'm going to get an alert. And that's exactly what happened. So I'm going to continue to go forward here. And what happened was on this little bounce right in here, this downward sloping trend line was breached. Okay, well, I watched the stock. The market was still super weak. And so I'm going to fast forward so that we can see what the market was doing at the time. The market was still super weak. And these both line up here. I didn't like those two red bars, but support had actually formed for the stock. So this downward sloping trend line has been breached. What did I do? I double clicked on that high right there because if that is breached now on a horizontal basis, I would like to know about it. Meanwhile, I'm looking at the market and I'm seeing that the market has actually started to find some support. So we've got some tails under body right here. We've got a long red candle here, and it's almost engulfed right in there by the next bar. So these two candles together are basically, if it were a 10-minute chart, it would basically show up as a bullish hammer, pretty much like that one and that one and that one and that one. Okay, so we've got support here. This was an attempt for the programs to try and flush out all of these buyers and trigger sell stops. And as soon as they tried to do that, maybe they caught a few people, boom, market rebounds right away. When you see that type of price action off of a new low of the day, it tells you that this move was simply to trigger sell stops, that there's no momentum behind it, there's no force behind it. Plus, we get a bullish 10P cross in here, so things are looking pretty good for the market. Let's fast forward and let's get our market bearings for the day. Here's what I see shaping up right now as far as the overall market. We got to go out to the D1 chart and take a look at what's in play. We have that long upward sloping trend line that's in play, and looky here, we got the 50-day moving average, which has actually been breached today. Every time that 50-day moving average is touched, we rally off of it. So if you're looking at a 5-minute chart and you are oblivious to what's going on a longer term basis, you won't be aware that this is major support that's being tested right here. It's that 50-day moving average. You need to be aware of key technical support levels like that. So let's take a look at the D1 chart and get other information. These long red candles are showing us that the market has had a tendency to open on the high, close on the low. That's why you get a red candle. Open on the high, close on the low. This is the most persistent selling which we've got about 2 weeks of selling and a nice downward sloping trend line right now, this is the most persistent selling that we have seen in months. It's even more than what we saw here. Every other decline has been 1, 2, 3, off to the races. 1, 2, 3, off to the races. 1, 2, 3, off to the races. You need to pick up on the fact that the character of the market is starting to change. Is it time to panic? Is it time to buy puts? No, we still have major support levels intact. In fact, every time that these market support levels have been tested, it has been the opposite. It has been a buying opportunity. Could this time be different? Yes, it could be. That's where we're not going to guess that this is support. We're not going to guess that the market's going to find support here and then take off to a new high. We're going to wait and see. And we're going to wait for confirmation that that's going to happen. Now, we also have a quadruple witch in play. That's context as well. Almost all of these drops have come on normal options expiration, monthly options expiration. So we get these pullbacks, could be program related, and then zoom off to the races. Well, this is a quadruple witch, so you need to be aware of that. You also need to expect that there's going to be more market volatility intraday. More context. That explains why the market has been so herky-jerky today and why we really don't have a whole lot going on right now. Let's go to a daily chart. And I spend so much time on the market because the market sets the table for all of our trading. It's the single most important element to your trading. And now you can see here's the low of the week, was breached pretty easily early in the day, and we know we've got those major support lines that are coming into play on a daily basis. So what do I see happening the rest of the day? Well, this could be a bearish trend day. Market selling off here, upward sloping trend line here. What do we know about this bounce right here? It's not very good quality bounce. This is not a very good quality sell-off either, by the way. You got 2 long red candles stacked. That's it. That's as good as it got. Look what we have here. Look what we had yesterday. Wham, 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 wham. 4 long red candles closing on their low. Tiny little reprieve in here with almost a doji preserving the low from that long red bar, and then wham, another one. Now, when you start getting a green candle in here like this, you know that you're pretty close to support because that shows that there's some buying interest. But in general, by the time this move has run its course, you can look at it and go, all right, that is some pretty considerable selling. Here, it's green candles, red candles mixed in, long tails under body. This to me suggests that there is some pretty major support around that 50-day moving average. This bounce right here, not very good. Green, red, green. There's some red in here, red here. Overlapping candles. These are not overlapping. These are stacked beautifully, where you get the close on the low, you get the open, not much retracement into the candle, and then blam, next wave of selling. That's a strong move. That's a move that you can get behind. This is just herky-jerky price action. I would say that this upward sloping trend line here, you got a bearish 10P cross. Could you get short? Yeah, you could. But so far the table has been set for a very jerky back and forth type of trading session. So I would keep my bets pretty small today. And I would favor just sitting back and waiting to see what happens at that 50-day moving average. Now, if they can take out the low today, it's going to have to happen in a considerable fashion. What do I mean? Long red candle, tiny little doji that doesn't retrace that long red candle very much. Long red candle with follow through. That type of pattern I can get behind. Plus, we also know bye bye bye, 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 bye 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 bye. Lots of buyers stacked up right in here. So what happens when we take out that low? All the people that were buying this dip in here, they're going to have their sell stops down about here. So if we challenge the low of the day, we're likely to see long red candle. Do we get follow through on that long red candle? Do we get the pattern that I described? Long red candle, doji, long red candle? If yes, see you later. This market's going to be in trouble today. If you get that long red candle like this, and then a long green candle that's almost an engulfing candle, it's just another head fake to try and shake out buyers on that low of the day, and that would tell me that later in the day we can expect a nice rally off of that low. If all of this coincides, so you get your next wave of selling, you get a nice big 10p trough down in here somewhere, and this low is preserved, and you get a long red candle followed by a long green candle and another green candle, I'd feel pretty good that we've got a double bottom low forming and that the market could bounce off of that 50-day moving average. There's a lot to figure out today because we are at a critical juncture. What happens today, what happens Monday, is going to determine how the next couple of weeks play out. We know that September is a weak month. Is that alone enough to short? No, not really. We do have some events coming up, by the way. Evergrande, which is a Chinese real estate mogul, they're supposed to be making an interest payment next week, and it looks like they're going to default on that interest payment. That could be pretty big news because it may be exposing some credit concerns in China. We'll see. We'll see to what extent the Chinese government comes into play. We've got the debt ceiling. That has to be resolved by the end of the month. We got an FOMC statement next week, which I think will be very benign, dovish, if you will. So there are a number of factors that are coming into play. And if you look at the daily chart, I've just given you conflicting viewpoints. What are those conflicting viewpoints? Well, we've got the heaviest selling that we've seen in a long time, but we also have support that we know has attracted buyers the entire year. So which of the two scenarios is going to play out? I don't know. I'm not going to guess either. I'm going to wait for technical confirmation. Once I see what happens technically, then I'll know which side I need to be on, and I'll do so with a vengeance because a breakdown in here would be very substantial, just as a bounce would be very substantial too, with a close near the high and a gap and go up day. That would also be very good. So that's how the table is set for today. And let's take a look at some of the recent picks that I put out. There have been some stinkers, quite honestly, because I had TWTR as a short and I liked what it was showing me. But you can see that TWTR is actually holding up very well today. And this was a downward sloping trend line that was violated. That is a bearish flag formation, but you can see how the stock has been able to poke back above the 200-day moving average. So not a good trade in here. So you had to shut that down. But again, market conditions are very tenuous right now. Microsoft was a stock that I showed you. We had this beautiful little bullish flag formation. And you can see how the stock really was not able to follow through very much yesterday, even though we had a nice market rally. And so the stock was down the entire day and it was able to recover, but not very good price action, not able to get through that high. I would have expected it to blow through that high and not to pull back this much if it were the real deal. So these are the things that you need to watch. I do like ETSY, but guess what? I don't know if the market's going to go higher or lower in here. So I certainly would only be day trading it, and I would only be day trading it if I had the market set up that I was telling you about. Another test of the low. Can't make that low, get another long green candle and a couple of them stacked that tell me that the market is going to hold that major moving average and then we're going to rebound late in the day, then Etsy would still be a pick of mine as long as the orange line is above zero and as long as it still preserves its relative strength. So that's how we trade. I hope that this granularity shows you how the entire process works. It's market first, very, very critical to get your market bearings. It's stock second. Would I short today? Yes. If I short today, I'm going to short the S&P 500. Why? Because these market bounces have been violent, I don't want to be spread out across 5 or 6 stocks that have relative weakness that I'm shorting. I would rather just be short the S&P 500 because that type of move is going to gain momentum. You see the type of momentum that we're getting right now? These are long red candles in here. These are consecutive red candles, tails above body. We're going to challenge that low. This is nice, steady price movement. Unlike this, which was herky-jerky mix of green and red. We've got our bearish 10P cross. We need to see what's going to happen right there. We take out this low, get those long red candles stacked. Yes, I'm going to be shorting the S&P 500. It'll be easy for me to get in, easy to get out, and I won't be spread across 5 stocks. If we get the bounce later today, given that the market's been super strong for a long time, yes, there I probably would be looking to take bullish positions and maybe 2 or 3 different stocks trading relative strength. That's how I'm approaching the market. If you've got questions, please leave them in the comment area. Good luck with your trading. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.